Although stock prices are very volatile day to day, there is one group of stocks that is less jumpy, those that pay generous dividends. In a bear market, these kind of stocks hold up much better than more volatile growth stocks. No matter what price the stock trades at on a particular day, you get quarterly and sometimes even monthly income to supplement your other sources of income. So let's take a look at the benefits of high dividend stocks in a very turbulent market time. Hi everyone, welcome to the Money Answers Minute. I'm Jordan Goodman, America's Money Answers man. I'm dedicated to giving the skills and knowledge you need to improve all aspects of your financial life, including understanding high dividend stocks. The dividend a company pays to its shareholders comes out of the profits that it earns. The percentage of the profits that is distributed to shareholders is known as the payout ratio. Well-established companies such as banks, insurance companies, and utilities have relatively high payout ratios of 50 to 60% because their businesses aren't growing very fast and therefore they don't need to reinvest earnings back into the business. Some companies, such as real estate investment trusts and business development companies, have to pay out 90% of their earnings in dividends to avoid paying tax at the corporate level. In contrast, fast-growing companies like technology companies or biotech companies pay little or no dividends because they want to reinvest their earnings back into their companies to accelerate their growth. So for you as an investor, the choice is whether you want to take your returns now in cash or later as a stock price goes up in value as the company grows. Many studies have shown that in the long run, about 50% of the return from stocks comes from dividends because the fast growth either never happens or comes in much lower than expectations. You can assemble a portfolio of high-yield stocks by buying individual issues or in a basket in a mutual fund or exchange-traded fund managed by an investment professional that gives you diversification. The industries that pay these high, steady yields today are electric, gas, and telephone utilities, master limited partnerships which transport oil and gas, and real estate investment trusts. They all pay yields in the 6 to 10% annual rate, which is much higher than a money market fund or a bond. A few examples of utilities would include Consolidated Edison, symbol ED, Duke Energy, symbol DUK, and AT&T, symbol T. Some examples of master limited partnerships would include Enterprise Products Partners, symbol EPD, and Magellan Midstream Partners, symbol MMP. Two top real estate investment trusts would include Realty Income, symbol O, and Digital Realty Trust, symbol DLR. Some funds that invest in a mix of these companies would include Gabelli Dividend and Income Trust, symbol GDV, the John Hancock Premium Dividend Fund, symbol PDT, and the BlackRock Enhanced Equity Dividend Fund, symbol BDJ. You may be concerned that some companies have cut their dividends because of the coronavirus recession, and indeed that has happened to some companies. So before you buy any individual stock or fund, check to see if they've maintained or cut their dividend recently. Most of the companies in the industries I've highlighted here offer essential services, such as energy, electricity, or real estate, so they have not cut their dividends so far. So if you want to dampen the volatility of your portfolio while earning generous income, assemble a portfolio of high-yielding stocks or stock funds and enjoy the ride.